Greetings everyone. In this small video, let's discuss the difference between journal and journal proper. You must know that in accounting, when we start recording financial transactions, we record all the financial transaction in the original book of entry, and that original book of entry is journal. We know that this is very simple to understand, that all the financial transactions are recorded in the original book of entry, and that book is termed as journal. It happens when size of the business is small and small number of transactions they take place in the business. So it becomes easy to maintain, to record all the transaction in journal only. But as soon as the size of the business that grows and number of transactions take place, number of cash transactions, a large number of cash purchases, credit purchases, cash sale, credit purchases, large number of such transactions take place in the business. In that case, it becomes uneasy and difficult to record transaction in journal only. In that case, I must tell you, please try to understand, when large number of transactions are there, then journal is subdivided into subsidiary books. Journal is divided into subsidiary books such as cash book, and you know that all the cash transactions are recorded in cash book. At the same time, you must understand, when a cash book is maintained, all the cash transactions are recorded in cash book, and these transactions cannot be recorded into journal. Then the next subsidiary book is your purchase book. Purchases book. In purchases book, we record credit purchases of goods. Remember one thing, credit purchases of goods. Similarly, in sales book, we record all credit sales of goods. It means the transactions which are recorded in these subsidiary books cannot be recorded in journal. And apart from these subsidiary books, we have some other books also, like purchase return book, sales return book, bills receivable book, and bills payable book. So I am repeating the words. Please try to understand the transactions which are recorded in these subsidiary books, purchase book, sale book, cash book, purchase return, sales return book. These transactions are not recorded in journal. It means the transactions left, the remaining transactions are recorded in a book, and that is not called journal. In that case, that is called journal proper. Why journal proper? It means there are some proper transactions which are recorded in journal proper in that case. It means in that case, when you are maintaining all these subsidiary books, you cannot use the term journal. In that case, you use the term journal proper. For example, the transactions which are recorded in journal proper, like interest on capital, interest on drawings, depreciation on fixed assets, entries relating to charity of goods, donation of goods, loss by fire, loss by accident, and loss by negligence, outstanding expenses, prepaid expenses, transactions of unearned income, accrued income. Such transactions are only left unrecorded, and that these are recorded in book of original entry, which is known as journal proper. Now you can easily distinguish between journal and journal proper. I repeat it finally in the end. When all the transactions are recorded in only one book, that is called journal. But when subsidiary books are also maintained, it means journal is subdivided into subsidiary books. In that case, journal is replaced by journal proper. So these are the basics of accounting, and I would request you everyone to have a good knowledge of the basics, of the depth of these terms of accounting so that you never face any problem when it comes to theory and the basics of accounting. Stay connected, improve your knowledge, subscribe the channel if not yet subscribed to have knowledgeable videos like this. Thank you.